This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the Mayfair Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby Peck Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th to Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast. Early bird discount registration ends August 31st, 2015.
Good afternoon, everyone. Welcome to today's Daily Recap. I'm Evan Lazarus, and I'm the CEO of T3 Live. I'm filling in for Scott today. You just saw a quick video on our Finance Festival. Before I get into today's trading action in the markets and stocks, I just want to recap that very, very excited about that event. It's been a long time in the planning stage. Sure to be both filled with lots of phenomenal presentations, content. I look forward to 2016 from some of the really some of the most interesting people in the world of finance, covering a pretty wide range in terms of backgrounds from money managers to active traders to everything in between. And that's in Florida, November 6th to 8th, and it's going to be one hell of a party. So if you're in the mood for some good networking, some really good presentations, meeting some interesting people, and having a lot of fun, then that's probably going to be the event for you. Let's talk about the market here. Where do I start? So let's start with the weekly here, and I'm going to look at the spiders. What I can tell you about the language of price, and again, I'm not going to talk about headlines, right? Because I don't make money, or we don't make money talking about headlines. I'm not here to opine on, the next course of action for Greece. I'm not here to talk to you about, what I think will happen geopolitically, because truthfully, I have no bearing in it. I have no say in it, and it's really out of my control. The market's been in this range, let's call it, for the last 8 months plus. Going back prior to the beginning of the year, really we kind of peaked here in November, and we saw this wild volatility, that one day in December, and then we've been range bound. And I'm going to call this range. I'm going to break it into two sectors: the upper quadrant and the lower quadrant. And we're now basically back here to our March lows, and about what looks to me ready to break lower and possibly, back down to those November, December lows, or January lows, whatever you want to call it, but this lower end. Now, I think depending on what happens over the next couple of days, we could be, beeline right for this 197, 198 zone. But it looks to me like that's, basically what's going to happen. And I would suspect, we may pierce this zone, but then ultimately, snap back a little bit. And then, from there, I guess we'd have to wait and see. Again, I'm just giving you my perspective on what I think may happen and why. It's all technically based. It's all based on, pattern, price, and movement, and nothing really more. Now, the headlines may be the impetus or the catalyst for what, ultimately breaks the straw that breaks the camel's back here. But it looks to me like, from a real support perspective, I do think the markets will see back down here. Now, do I think they'll see down here in 2 weeks? No, I think this will be a trade that develops over the next, several months in some sort of fashion, the same way it did to the upside. Now, I think we'll, like I said, we'll probably go down, up, and then, maybe start to make that larger move over time down. That to me makes sense. You have what looks to me as the ominous looking potential head and shoulders pattern, and that would be, kind of this structure you see here in terms of the left shoulder back to a flat support line. That then, makes a new high, again, another rounding top type of structure. And I like I said, I do think that would ultimately take us back down to that, this zone before then bouncing again and forming that right shoulder. Now, this whole pattern, again, is I'm giving you a hypothetical, right? What if this winds up being something more substantial? That's all I'm putting out there. I'm not suggesting anything more than that. All I'm suggesting in my commentary here is that this is the area to me that is the most substantial in terms of support. It's not necessarily right here. I think the market may slice through, these December, January lows like relatively easy. I think we might, in the next couple of weeks, slice through, bounce back, and something along those lines. The market is definitely seeing price decay. You see it in our averages. We've broken out of, our little micro ranges that we've been in for what seems like forever, but really only the last, couple of months. So that's kind of what I see evolving here. And I do think you have to be prepared for more lows to come. I'm not going to hide behind it. I'm not going to say, I think it's a pullback that needs to be bought. I'm going to tell you flat out that I think that this market is going to see a larger downside price movement. Now, as we go down to the lower time frames, the lower time frames, again, just showing you the same things that I'm showing you with just more detail. That area of support, as we look at the detail, is really down here, right? So I'm just showing you all this, back and forth, price action that we've seen over the last several months, just a little more granularly. We are on the cusp of breaking out of this zone to the downside. You have a ton of resistance up here. This market tried several times to trade higher, and ultimately, sellers now stepping in and in control. And unlike other pockets where we've seen some sell-off, we are sitting under our declining 8-period EMA. Even today, on today's gap up, sellers stepping back into this 8. We have a nice pivot that developed last week here off of that first leg of selling down. We bounced, and then now starting to begin to unwind. Now, I think we can sit in this general zone maybe for a few more days or build some more lower level consolidation down here. But nevertheless, I think the sellers are now in control of this market and will be for some time. It's hard to have that perspective. I know many of you have been, mentally trained over the last couple of years to buy every dip, and that's the way the market goes. But you have to respect the language of what this chart's telling you. You have to respect all this overhead resistance. Bottoms and tops happen in different ways. Bottoms typically happen exactly the way this one did, down, up, right? We call that a V. Tops typically happen over a period of time. Tops typically build. They'll build in some sort of U-shaped fashion. Very rarely will you see a top go up and go right back down. Tops, as we defined a top, meaning the peak of some sort of larger up move or down move or the bottom. That's the way it typically, technically, price works. And if we go back in time, before we broke down in 2007, 2008, the market really did build this big, very big, U-shaped top. It wasn't as if we just went down. It was something that built over a large period of time. And finally, when we broke, when we broke that support level, that's when the panic and the fear really set in. But this was a pattern that built over time. When we bottomed in 2009, notice the V-like structure. So, markets have a very interesting way of kind of taking form and shape. And if you're not reading the tea leaves, so they say, then you're really not doing your job. A job of any good active trader is not to be a bull or a bear. I know everybody has their own personal biases and what they'd like to do, but your job as an active trader or someone who's managing money in the market, whether it's day to day or monthly or weekly or what have you, but you're paying attention and you're listening to this video. If you're listening to this video, then you're paying attention. Your job is to make money. Your job is to be an opportunist. Your job is to figure out, where the path of least resistance actually is, and to make every attempt to walk down that path. There are going to be times you make the attempt and you're not right and you're wrong, but nevertheless, your job is to understand, how to define and understand risk, how to read the signs, and then how to make decisions based on those signs. Obviously, I'm giving you a very broad stroke, but that's the nature of the mentality of any successful active market participant. As we look through, we'll start with Apple. We'll start with sort of our big boy, Apple. Everybody's love. It's very similar pattern, right? Bunch of sideways movement going back to February, finally breaking down out of this range for the most part. And there's really not a whole lot of support in Apple. I would say your next real area of support probably comes in somewhere along this zone. So Apple has earnings in a couple of weeks. So this may, this trade, I'm not suggesting that we're going to go down straight down, but what I am suggesting is that this trade may unfold as a result of, or potentially, through earnings season. I do think you have a ton of overhead resistance that is built here. And we have, again, just like the market itself, respect the price action you're seeing. Don't try to be a hero. Don't try to step in and say, I'm smarter than the market. I'm smarter than the stock. Read the signals and understand it's either your job to say, look, this isn't the market for me. This isn't the trade for me to be involved in. This isn't where I excel. I'm going to go to cash. Or flip the switch and figure out how you can position yourself to potentially profit from the price action that you see. Those are your choices. Those are the two paths that you can take. And I've had this conversation with lots of people over the last several weeks. If you choose to be a trader and you choose to be in the market on an active basis, you're choosing to be in the business of risk. If you ignore the signs that the market gives you and you're not well versed in how to understand and read risk, then you're not really going to be prepared for the long road in this business. Successful trading is not about today or tomorrow. It's about the bigger picture and the longer term, how you're going to develop a path and a foundation to get to 5 years, and then to get to 10 years, and then to get to 20 years. Much like my partners, and Scott's a great example of that. Him and I started from basically nothing and have built careers because we learned very early on to respect the language of price movement, price and volume, and risk. You put those three pieces together in the puzzle, and you're going to find that you will have a nice, long-term, successful, potentially successful, time to be in the marketplace. And it will involve going up, and it will involve going down. We've had lots of, So like I said, I think we're on the cusp of something potentially larger and certainly more interesting. As an active trader, that represents opportunity, right? Stocks go up, opportunity. Stocks go down, opportunity. So take advantage of the things that you're seeing in front of you. There's lots of different areas to look right now. Obviously China's been in the news and everybody's talking about the Shanghai. Look, from a technical perspective, I can, just to kind of opine on it, right? You're at an area of potential support. This was the last major breakout area we saw back here in I guess it was March of this year, and we're back to that area. The 21 EMA way up here, the market way down here into the 200 EMA. Now, you might see some, a little bit more volatility in here, but I think this is somewhat of a buyable scenario in terms of risk reward. If you do get some sort of, tail down that snaps back, then I think that, this index or this market effectively could be a reversal, a mean reversion trade. The first stop should be this 8 EMA. So it's typically when stocks become too stretched, either upside or downside, when they do finally snap back. And again, this can go lower. I want to make sure that we can see down into the lower end of this range before snapping back. But you have to wait for the right timing signals. But the trade will ultimately reverse itself. But you don't need to be a hero. You don't need to just step in and buy, haphazardly. But we are getting to the point where this, potentially is in an area where it becomes more of a mean reversion scenario than something that potentially goes lower. Now, when you're in times of panic, you can do your best technicals, but its irrational exuberance will drive stocks sometimes a little bit further, like a rubber band, to the downside, or indexes or markets will drive them like a rubber band down, only to snap back. And as we look at the market, our market, I guess the best example of that would be, the lows of 09, of 08, 09, when we bottomed down here. This to me represents, kind of that rubber band effect, as we kind of go back in time. So just to kind of highlight what I'm talking about, that's an example that I think is relevant. Actually, as one of the stocks that I've been keying on in the off the charts product lately, we took this trade for a short back here at 142. We covered at 126. And then today I actually issued another alert to reshort here at 141 today, as again you got that that massive fear-driven volatility. We took advantage of that, and then again snapping back right to that 21. Notice today where it topped before tailing down. It traded right to about 144, right into that 21 EMA, which is an area to me that represents now it's risk-reward wise. This snapback represents a good area to be short, because the risk is rather contained in my technical opinion up here relative to what the potential opportunity is to trade lower again. Another example of that comes to mind is Yahoo. Right, Yahoo just a few weeks back saw this fear-driven one-day, massive sell-off on big volume. It snaps back into the 21 EMA, where it then, it kind of retools, and then sellers, clearly come back and take control of the trade. So, I'm giving you giving you examples of the concept of what I'm talking about. So, as far as the market goes, obviously there's a lot of different areas to be. There's biotechs and there's tech stocks and there's semiconductors, and there's so much movement happening. Pick and choose your battles wisely. As I always say, there's lots of tools that we provide for traders, whether it's in trade recommendations or our virtual trading floor community, that really will help you narrow your focus. But there's going to be opportunity in this market through the summer, out of the summer. I really do believe that, and it's not that just a personal belief. It really is supported and backed up by objective, price movement. So, for what it's worth, I know my perspective is not always sometimes in line with what Scott has to say, who usually does the, these afternoon videos and morning videos. But again, it's healthy to have another side, another perspective, another look-see, as our training is pretty much spot on in terms of what we do and how we do it. Our perspective sometimes in the way we approach it just slightly different. So it's healthy to have, a little bit of the other side. And as always, I wish you lots of luck. Don't forget about the Finance Festival, t3live.com/festival. I'll see you there. Have a nice night, everyone.